welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into the first quarter earnings report of Independent Bank. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Independent Bank's latest financial performance.
Let's get started with an overview of the report. Independent Bank has reported a net income of $44.4 million for the first quarter of 2025. How does this compare to their previous performance?
Well, the net income has decreased from $50 million in the previous quarter. This decline is primarily due to a higher loan loss provision, which we'll discuss in more detail later.
Revenue and profitability overview. Let's delve into the revenue and profitability metrics. Independent Bank reported an adjusted earnings per share of $1.06, which fell short of the analyst's forecast of $1.18. John, what are the key factors behind this performance?
The shortfall in EPS is largely attributed to the elevated provision for credit losses, which increased to $15 million from $7.5 million in the previous quarter. Despite this, the bank's net interest margin improved by 9 basis points to 3.42%, indicating better management of interest-earning assets and liabilities.
That's interesting. How did the bank's core fundamentals perform?
Overall, the bank maintained solid fundamentals with a return on average assets of 0.93% and a return on average common equity of 5.94%. These figures, while slightly lower than the previous quarter, still reflect a stable operational performance.
Operational efficiencies and future outlook. Moving on to operational efficiencies and future outlook, Independent Bank has shown some positive developments. Can you elaborate on these, John?
Certainly. The bank's deposit balances increased by $370 million, or 2.4%, which is a strong indicator of customer trust and liquidity. Additionally, they raised $300 million in subordinated debt, which will support future growth initiatives. Importantly, they also increased their quarterly dividend by 4%, marking the 15th consecutive year of dividend growth.
That's impressive. How do these factors position the bank for future success?
These strategic moves, particularly the debt raise and dividend increase, suggest a strong capital position and a commitment to returning value to shareholders. The bank is well positioned to navigate the current economic environment and pursue growth opportunities.
Asset quality and risk management. And let's discuss asset quality and risk management. Independent Bank reported net charge-offs of $40.9 million. How does this impact their financial health?
The increase in net charge-offs, primarily due to a few classified commercial loans, is a concern. However, the bank has proactively increased its provision for credit losses to $15 million to mitigate potential risks. Their allowance for credit losses stands at $144.1 million, which is a prudent measure to safeguard against future uncertainties.
What about non-performing loans?
Non-performing loans decreased to $89.5 million, representing 0.62% of total loans. This reduction is a positive sign, indicating effective risk management and loan recovery efforts.
CEO insights and strategic initiatives. Finally, let's hear from the leadership. CEO Jeffrey Tengel mentioned positive activity in core fundamentals. What are his key insights?
CEO Jeffrey Tengel highlighted the bank's success in balancing commercial loan originations and deposit growth. He emphasized the expansion of their margin and the well-maintained expenses. Importantly, he reassured stakeholders that the integration efforts related to the pending acquisition of Enterprise Bancorp are on track.
How does this align with their strategic initiatives?
The focus on core fundamentals and strategic acquisitions aligns with their long-term growth strategy. The consistent dividend growth further underscores their commitment to shareholder value.
Key takeaways. In summary, Independent Bank's first quarter results reflect a mix of challenges and strengths. While they missed the EPS forecast, their operational efficiencies and strategic initiatives position them well for future growth. John, any final thoughts?
Independent banks focus on core fundamentals and strategic growth initiatives, such as the pending acquisition and dividend increase, are positive indicators. Investors should keep an eye on their risk management practices as they navigate the current economic landscape.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on independent banks' performance in the comments below.